Sofi stock yet again hit a new all-time low today at $6.09 per share. Nothing new there. But what is new, and what I never thought I would possibly ever say, is maybe Facebook saved the stock market. And I know that's what a lot of people are thinking, that maybe, just maybe, because of Facebook earnings, the stock market will do okay. And that could be the case, but we have a lot more important earnings that come out tomorrow that will move the markets in a substantial way, as well as that we do have that economic data that does come out in the morning as well. So this is a good sign, and we're going to talk about the Facebook numbers. Congratulations to people that did hit that trade. If you lost money, keep in mind, there's always a new trade, and this money you're trading, it's real, but it's not actually real. The best thing to do is focus on, what makes you happy in life, and spending time with kids or your kids or doing fun things. So just keep that in mind. I know a lot of people are betting that Facebook would go down, but nonetheless, let's get into all of this information. We are going to talk about SoFi stock. Obviously, we're going to talk about the broad markets. Let's get to it. Hopefully this video does help you guys make some money. Hit the like button, subscribe to the channel if you guys have not already. Thank you for doing that, and let's get to it. So Facebook stock is up 19% right now, going from about $172 at the close of the day today, now at $209 per share. Absolutely crazy. And it goes to show, in this market, if a stock is down this much heading into earnings, it really doesn't even take good earnings to make the stock go up substantially. It just takes really the stock not hitting that worst case scenario. Facebook earnings could have been a lot worse. So people are, kind of taking a breather there, like, hey, it could have been a lot worse. We were bracing for a lot worse, and it wasn't, so that could be a bullish thing. But Facebook earnings were not good at all. It says Facebook shares spike on better than expected quarterly earnings. Meta's earnings per share for the first quarter topped analyst estimates. Revenue came in below expectations, as did the company's forecast for the second quarter. And I'm sure Facebook is kind of surprised at what's going on with their stock right now, because they actually guided down, which guidance tends to be more important in this marketplace than the actual numbers that you post. So they missed on revenue for this quarter, and they also guided down for next quarter. All in all, not great. They did beat on EPS, and I will link this down below in the pinned comment of this video if you guys do want to, check this out for yourself. But one of the biggest things that did help Facebook, it says Facebook lowered its total expenses guidance for 2022 to somewhere between 87 to 92 billion, below its earlier estimate of 90 billion to 95 billion. It expects most of that expense growth to be driven by its family of apps segment, followed by Realty Labs. So some metaverse stuff there, and I think people like that because, or I should say investors like that, because it's showing that Facebook is not really going to let metaverse drive the company into the ground if it doesn't ultimately work out, right? People wanted to know that they're not going to spend $10 billion a quarter to try to grow the metaverse if it's going to take 7 to 10 years to do that. I think it kind of shows investors that they could pivot. Now, Facebook investors obviously are loving this earnings, up 19.3% right now here in after hours, almost to $210 per share. But I don't think you can call a victory for the stock market based off of Facebook earnings. Now, you have to get the big dogs out the way, which is going to be Apple and Amazon. Apple at this current stage is like 5 times larger than Facebook. So to put that into context, the S&P is up 0.74% right now based off of the sentiment around Facebook earnings, but Apple's 5 times the size of Facebook. I think that's going to be a much bigger deal. Apple alone controls about 7% of the S&P, and even more of that in the NASDAQ. So we could have some problems tomorrow. Things could be good. I'm concerned about Apple and Amazon for different reasons, but more so the same reasons, right? Amazon has that fuel cost. That's a massive cost to Amazon when they already have a low margins, and they already has had to raise prices, right, to deliver things, a fuel surcharge. So I'm wondering how bad that is going to be for the underlying business of Amazon, how that's going to hurt their bottom line, as well as that, if you guys remember back to last earnings for Amazon, their earnings were not so good on their core business, right? They're delivering products, their Amazon Prime, all of that was not that good, but AWS came in good, and that's what saved the stock. Now, Apple at the same time should, in theory, have a lot of that inflation cost associated with commodities and a lot of weakness in China. So those are the two reasons why I'm not so bullish on these two companies. I think they have a lot more headwinds than a lot of these online stocks like Microsoft, Google, and Facebook. That's mostly online based, right? So I think Apple and Amazon are going to be the real test in the markets. If things are good tomorrow with those stocks, then you could certainly have a green light for the markets, and you could see possibly new all-time highs depending how those earnings actually do come out. So I think that's going to be very interesting. Could be quite scary for people if they do have margin or if they are fully invested in the markets. It's going to be very interesting nonetheless. Now let's talk about Sofi. Sofi was down 2.23% in regular trading, up 1.79% here in after hours based off of Facebook earnings. And I'm actually surprised. Well, PayPal is going up a little bit, up about 6% right now, but they were really struggling here in after hours. Their earnings call might have said something. I'll have to look at that, and that might help to drive SoFi up tomorrow if PayPal earnings are good and they can actually hold up throughout after hours. PayPal earnings were just terrible across the board. They guided down yet again. It's like the 10th quarter in a row that PayPal has actually guided down. So we'll see how those earnings do ultimately hash out, how the earnings call does go. That could be a tailwind for SoFi and could help the stock out. But really, SoFi is at a very important level. You're coming down to that psychological support level at about $5 per share. If Amazon, Apple earnings are bad, I would expect the stock to come down and test that $5 level. If they are good, it's very possible that we could see a big rally from these prices at, $6.15 per share, where we are currently trading at. Well, actually $6.26 per share, considering what happened here in after hours. That 11% boost definitely did help smooth things over just a little bit. Like I said, S&P taking a big move here in after hours. But let's talk about the actual option activity for SoFi stock, because it seems like every single day SoFi is hitting a new all-time low, but the option activity is extremely bullish, especially the expirations for the 2024 options, the $10 call. You guys can see right here, you did have a $315,000 order that did go through. That is showing that a lot of people are bullish in the longer term. By like 2024, they're extremely bullish, but in the near term, they're not as bullish. Even out to 2023, seeing a lot of longer term put options for those 2023 expirations that are coming through. So pretty interesting. 100% positive order value, $219.3 thousand worth for the day. Over the past week, 70 orders totaling $12.45 million, positive order value of 75%. So I think it goes to show this is really something you want to hold on to, give it time. When you plant a seed in the ground, if you guys farm anything, you don't grow your crop instantly. It does take some time, and that's the way that I would look at SoFi. Now, the current short interest of free float is sitting at 20.28%. Current shares that are sold short, 146.57 million. Cost bar max sitting at 3.54%. The utilization at 100%, and the days to cover sitting at 3.84. So the situation here is looking really prime for a short squeeze if the market conditions do ultimately turn around and SoFi does become a more favored stock to obviously invest in. We'll see if that does happen. Could happen tomorrow and after hours. It could happen in a year from now. Eventually, in my personal opinion, it will happen. Now, one of the bigger important things to pay attention to as well, just not even directly considering Apple and Amazon, is the economic data that comes out tomorrow. You have PCE prices that come out. That is a reading of inflation that the Fed pays very close attention to. You have initial jobless claims, but you also have GDP for Q1. I think this will likely be good. I really don't think you're going to see a big negative reaction in the markets. I don't think it's going to be necessarily bad, because consumer, spending for services and like experiences, vacations, all of that travel is about 70% of all GDP for the market. And that was obviously good for Q1. People are going out, they are spending money, they are going out to do things. So I do think it is going to be a bullish thing. I don't really think that's going to crater any potential rally that we could see based off of Facebook earnings. But nonetheless, guys, that is pretty much it. Watch out for Amazon And Apple earnings coming tomorrow. This economic data in the morning. Watch that key level for SoFi at $5 per share. And then the key level at the 50-day moving average at $9.16 per share. If we do, for whatever reason, see a very strong day tomorrow and on Thursday and Friday, it could be very, very good. I'm going to go tend to my daughter because she is just having a great time. She never lets me film. So thank you guys for tuning in. Appreciate all you guys. Hit the like button, subscribe to the channel, and until next time, you guys take care.